Good afternoon, and welcome to our analytical corner on the rise of the silver economy. My name is John Bishop. I work in the Secretary's Department of the IMF. And before we begin, may I ask you to please silence your cell phones? I'm going to bring my colleagues, Eric and Andressa, onto the stage. They're going to present for about 10 minutes, and then I will open up the floor for your questions, your voices. So let's just get right to the main event. Everyone, please, warm welcome for Eric and Andressa.
Did you know that in 1970, the world's median age was just 20? It is now around 30 and is projected to reach 40 in 2080. Over the next 45 years, the share of older population, aged 65 and above, is set to double, from 10 to 20%, reaching almost 50% in some countries. These dramatic demographic shifts are giving rise to a silver economy, in which older individuals have an increasingly vital role to play in shaping economic activity. Have you ever wondered what this means for our future? I'm Andressa Lagerborg from the Research Department.
And I'm Eric Huang from the Western Hemisphere Department. Today we'll discuss the global implications of population aging and why proactive policies are essential to harness the benefits of a healthier and longer living workforce. So rapidly falling fertility, along with a rise in life expectancy, is occurring worldwide at an unsynchronized pace. In this chart, we mark the years in which countries cross their demographic turning point. That is the moment when the share of working-age population begins to shrink. At this moment, almost all advanced economies, represented by the red dots here, have crossed this threshold. Over the next 15 years, most emerging market economies, represented by the blue dots, are expected to follow. And by 2070, even low-income developing economies, represented by the green dots here, with currently booming young populations, are expected to reach this stage.
Population aging poses far-reaching economic challenges. As more people retire, but fewer young workers enter the labor force, countries may see slower growth and a shrinking and less dynamic workforce. At the same time, governments collect lower tax revenues while facing rising costs from pensions and healthcare. Ultimately, without proactive policies, these trends can lead many countries to face lower economic growth while rising fiscal pressures going forward.
As Andressa just pointed out, this gloomy view of demographics foresees adverse growth and fiscal challenges due to population aging. However, relatively little attention is paid to the fact that today's older population is staying healthier for longer. And our analysis highlights a silver lining, that healthy aging can create unique opportunities for economic resilience. So we know that on average, older people nowadays are living longer than the previous generations. But does it necessarily mean that they are also healthier than previous generations at the same age? Well, one way to look at it is by breaking total life expectancy down into two parts. Years lived in full health in the blue area, and years lived in less than full health in orange. And as people age, their health naturally starts to decline, moving them from the blue to the orange. What's pretty striking is that while the number of years in poor health have stayed roughly the same over time, most of the increase in life expectancy has come from people living more years in good health. But of course, we see a temporary setback during the pandemic.
So to dig deeper into the evidence of healthy aging, we have looked at survey data sets with nearly 1 million observations for individuals aged 50 and older in 29 advanced economies and 12 emerging markets during the period 2000 to 2022. And this chart shows a clear and positive trend in health outcomes over birth cohorts, even when accounting for individuals' age, gender, education, wealth, and country of residence. In other words, an average 70-year-old in the year 2022 is found to have significantly better health than an average 7-year-old in the year 2000. And the largest improvements we see are for cognitive abilities. although improvements are also seen in measures of physical health. And this all fits well with what we know, that as individuals get older, they tend to work in more cognitive and less physically demanding jobs.
But one question is, does the improvement in measured health of older people necessarily translate into better labor market outcomes of them? To explore this, let's walk through a thought experiment. Now imagine this. What if a 70-year-old has the same cognitive ability as a 61-year-old? What kind of difference would it make over the course of 10 years? This is essentially what we're estimating in this chart based on a causal analysis. And as you can see, both labor earnings and productivity would jump up by 30%. And there's a 20% increase in the chances of staying in the labor market, and people end up working roughly 6 more hours per week. That said, this effect isn't necessarily spread equally among the population. Actually, we find that the biggest improvement show up among people in their 50s and 60s. And at higher ages, these effects begin to taper off.
So as Eric has just shown us, healthy aging offers a silver lining for older workers' labor market prospects. But what does it mean for the broader economy? We use a macroeconomic model to study this, and what we find is quite noteworthy. That if recent healthy aging trends continue going forward, this can boost countries' growth by 0.3 to 0.6 percentage points per year in the medium term, with a world average of 0.4. This might not sound huge, but it amounts to roughly 15% of the world's historic growth rate. So it's a meaningful lift.
However, this boost won't necessarily last forever. With current labor market and health policies still falling short in many areas, we may soon hit the limit on how much healthier we can stay as we age and how much longer we can keep working. And healthy aging alone won't be enough to reverse the broader economic slowdown that we're seeing. And that is why we need smart labor market policies to keep the momentum going.
So labor supply policies can help us make the most out of an aging workforce in 3 key ways. First, better health policies along the life cycle can help to further boost healthy aging, allowing workers in their 50s and 60s to stay more active and more productive, even before their retirement age. Second, as people are living longer, there's also some scope for longer careers. And while raising the official retirement age is one option, in line with life expectancy, we could also see individuals choosing to retire later voluntarily, especially if they're healthier and faced with more age-friendly job options. This, of course, also depends on pension system incentives and access to training. And finally, in most countries, we still see today that men have higher labor force participation rates than women. And so narrowing this gap presents an additional opportunity to boost the workforce.
So we ran simulations to estimate how much these policies that Andressa just mentioned can translate into higher growth for the next 75 years. And the results really vary a lot by country. Health policies, represented by the blue bars at the bottom, have the biggest impact in countries that are currently still far from the health frontier. In India, for example, these policies could lift growth by over 0.2 percentage points per year for the next 75 years. And in countries where the increase in effective retirement age hasn't quite kept pace with the increase in life expectancy, such as Greece and Italy, policies that support longer careers can give growth a major boost. And in countries where there's still a large gender gap in labor force participation, policies to close the gender gap, which is represented by the yellow bars, have the biggest impact. And overall, the combined effect, represented by the diamonds, range from 0.1% in Sweden to 0.5% in India, with a world average of around 0.35 percentage points a year. And that is enough to reverse about a third of the economic slowdown due to population aging.
And beyond GDP growth, these policies can bring about broader economic benefits. With governments facing mounting fiscal pressures from aging populations, a larger and more productive workforce can increase fiscal space. And this can be used to invest more in priority areas such as education or infrastructure, all while keeping public debt in check. But the fiscal savings that we estimate for these policies are found to vary widely across countries. In the UK, low-income countries, and for the world average, the gains might be less than 1% of GDP. But for some countries, like Greece or Italy, they could even exceed 4%.
So to sum up, while population aging presents economic and fiscal challenges, healthy aging offers a unique opportunity to ease these pressures. By enabling older workers to stay healthier for longer, it can ease fiscal burdens and boost growth. But to make the most of it, countries need to take proactive steps, such as promoting healthier lifestyles and preventative measures from an early age, and supporting longer careers, and providing reskilling opportunities so that workers can keep pace with the changing job demand, and closing gender gaps in labor force participation. With the right actions, we can create opportunities to build stronger and more resilient economies. Thank you.
Thank you very much. Great presentation. All right, so let's open up the floor for the Q&A. If you have a question, we can bring a microphone to you. When you ask your question, if I might ask you to stand up, give us your name, affiliation, and then a short question. We want to get as many voices in as possible. All right, could we start here with the lady in the front row? We're bringing a microphone to you, right?
Can you please stand up?
Hi, my name is Kathleen Kennedy Townsend, and you probably know my brother, who's the Secretary of Health in the United States. Why is England so low? Why is England like undeveloped countries in terms of any help that you would give them? And why is there such a difference between England and Greece? That's my first question. And the second question, because the administration just said we need a baby boom, are there any countries that have tried to create more babies, other than my mother, who's done a really good job with 11 children? Has anybody done a systematically good job?
Do you have any sense of the first one?
Yeah, maybe on the second one, actually, if I can come in on the second part of the question. So we do estimate the model for different fertility scenarios, so also a high fertility scenario, so we do show results for that. And of course, that attenuates the effects of population aging. But in terms of policies, what we know from country experience is that the impact of policies is a little bit mixed in this area, but basically policies that can help foster good work-life balance for females in particular, such as more flexible work or better maternity leave, and these kinds of policies can help to foster higher fertility rates at the same time as preventing a drop in labor force participation. On the first point?
On the first point, with regard to the health policies, so basically underlying our model, which simulates the effect of different policies, it's based on measured health of cognitive ability and some form of physical health. And in the data, we do see that countries that with currently low health measures in different areas do see some signs of convergence with the frontier. And in this case, I think it's Sweden. So basically, in our simulation, our underlying assumption is that over time, countries that are lagging in terms of health indicators will gradually catch up over time. So our observations about each particular country is based on the country's specific surveys.
So if there is a smaller initial gap with respect to the frontier of health, we will see smaller improvements over time, just because the convergence effects would be smaller. So the effects, I think, show up in the simulations that way.
Okay, thank you. Any other questions from the audience? Let's go to try the back of the room, that gentleman there, right next to you. Yes.
Thank you. Kelly Hempel, an investor, and kind of intimidated to follow that question. But in the same line, looking at the United States, which I believe has a lower health span than equivalent high GDP economies, do you have a sense of what the benefits would be from an increase in health effects from a growth perspective for the U.S.? It struck me as though that might be an interesting case. Thank you.
Do you have anything about the U.S. particular measures?
So it's true that in the empirics we do observe that the US has lower cognitive ability for the same age compared to at old ages compared to other countries at the frontier. It still has higher than many other countries, right? So it's yeah, so it does have lower health scores compared to similar GDP countries which have higher ones. It's true. So I think there's room for policies for improvement in health for sure.
And in our wheel chapter, which is chapter 2 of the current recently issued wheel, we do have the US in its sample. So with regard to how much health policies can boost growth over the next 75 years, I don't know on the top of my head, but you're encouraged to consult the chapter, and then we do have a lot of details about the data that we use and basically what's the effect for US there.
Wonderful. We have a question here in the front.
Please, can you stand up, please?
Yes. Oops. Hello, I'm Dr. IG, private sector, a consulting firm in AI. While you talk about the health of the growing population, I think that you didn't mention anything about the health of the young, because everybody assumes that the young are also very healthy. However, we know that in the US and other countries, obesity from children all the way to very young people is a pandemic. So I think that it should be considered in your studies or analysis that there is a big chunk of the population that are not healthy, and they are young, from little kids all the way to 50s, 60s. So do you have a comment?
Yes.
Yes. Yeah. No. Do you want to go in?
Yeah. Yeah, that's a very nice question and very good observation, and we totally agree with it. So in this chapter, our focus is on what happens to the older population, right? Because we foresee that basically the age structure is going to be very severely tilted towards the old, and basically the policy that we have been discussing is what we can do for the older people. But in terms of health policy, actually what our chapter is trying to highlight is that a lot of things can happen at an early age, like preventative measures and better lifestyles. The changes start early when you're young or when you're middle-aged, and that difference kind of gradually translated into different health outcomes. Some people start to have chronic diseases, some people do not, because of the habit and all the other measures that have taken at an early age. And this is actually part of the policies that we're trying to highlight. So for example, we can subsidize healthy food while taxing some unhealthy foods like high sugar drinks and unhealthy food. And these can start to make an effect from an early age, like people in my age, for example.
Great. Any other questions? I don't want to neglect this side of the room. We have a lady here on the, if we get a microphone. There in the third row. Yes.
Hi, my name is Anna Hochberg. I am a recent Master of Public Health graduate from George Washington University. I wanted to ask about how you guys addressed when you were taking models for like people that could voluntarily continue, so not changing the age where people would retire, but trying to address like a culturally competent kind of situation where people don't resist because there's a lot of cultural resistance sometimes to program and policy changes. So I was just curious how you accounted for that.
Let's start with the empirical observation of like people retiring later because of better health.
Yeah, so I mean, we do see that people tend to retire later and engage more in the labor force if they are healthier. So I think that's one of the main insights from our analysis, is showing that actually better health allows people to decide actually to postpone their retirement or work more. And this is independent actually of the pension age. So we control for like country, year, fixed effect, and this shows that basically even in addition to that, people with better health tend to work more. And so that's one insight of, but there's also the idea of having more age-friendly jobs. And I think that jobs that improve kind of teleworkability, more flexibility, or less stress levels, or allowing for jobs that kind of are better suited towards older workers can actually also help them decide to stay active for longer. And I mean, I know personal experience or personal examples of that, of people who have decided to postpone their retirement because, for instance, their job is suddenly offering a little bit more flexibility, more teleworking, and making it easier for them to stay attached to the labor market.
And on top of that, it's also important to, for example, come up with legislation to combat age-related discrimination and create opportunities so that older workers can thrive in their workplace.
Wonderful. We have a question here. The gentleman in the tan suit. Yeah.
Thank you. Rick O'Sullivan, Change Management Solutions, and a member of the baby boom, and glad to hear that's still all about me. My question is, in terms of incentives in any sort of infrastructure investment that needs to be made to help people work longer. You just mentioned people wanting to work longer. Given what just happened to my 401k, I don't think that's an issue. But are there any infrastructure developments that are investments that are necessary that are missing right now to keep older people in the workforce?
So I think, I mean, first, above all, I think that it's like we need to start adapting to the fact that people are living longer, and we need to change our mental culture around it, and in the workplace as well, make sure that the workplace is more adaptable and more age-friendly, if we want these people to work for longer as well, voluntarily. And so I think that's important. So like the infrastructure around helping support that is important. And then finally, I think maybe AI can also play a role in that. And in fact, we see that AI is actually older workers are better positioned than younger workers in terms of being more frequently in occupations that are less more complementary to AI. So that's one good news. But of course, we need to make sure that they're able to adapt to the new technologies and stay on top of that so that they can actually continue in their jobs.
And we do see a lot of positive development during and after the pandemic. We see more flexibility to work remotely and work more flexible hours. And these technological advances, I think, move in the right direction of encouraging more older workers to keep contributing to the workforce.
Okay, I think we have time for just one more quick question. Anyone with a very brief question? Sir. All right, yes.
My name is Tedros, a grad student from Johns Hopkins University. I didn't see any technology gap in your graph, and I'm wondering if that was a consideration as part of your analysis.
Thank you for the question. So in the model, which is in the back of our analysis, we do have, so first of all, we have labor. This is the center of our presentation today, and we also have physical capital. And on top of that, there's technology, which determines the total factor productivity across different countries. And in our model, we do have different levels of technology in different countries. And if you look at, for example, what happens across countries in the next 75 years, a part of the economic slowdown or the heterogeneity of it is determined by the different technology levels. But of course, at this point, it's always a challenge to, for example, to foresee what's going to happen to total factor productivity, what's going to happen to innovation in a span of next 75 years. So our chapter's focus is on what kind of labor policies we can look at to help older workers engage more in the labor market. But of course, as you rightly pointed out, a big part of combating the broader economic slowdown also needs to rely on improving total factor productivity.
Wonderful. So I'm going to begin to wrap up this session. But before I do, let's go to just big picture time. What's the one key takeaway you want our audience to leave with from this presentation?
So as we see populations aging, this actually has a very positive component in it, which means that we're living for longer and healthier. And so it's very important that society start adapting to this and implementing labor supply policies to foster and better engage these longer careers. And importantly, we see a lot of health inequalities as well. So we see poorer countries catching up to the frontier, but what we don't see is catching up within countries. So I think it's going to be very important to invest in better human capital and better health and make this process inclusive in order to all of us to make the most out of healthy aging going forward. Thank you very much.
Wonderful, thank you. Everyone, please, big round of applause for Eric and Andressa. Thank you so much. I know we're all looking forward to working deep into our 90s, so thank you for that. My friends, this is the last Analytical Corner of these spring meetings. Thank you so much for coming, and have a great meetings. Thank you.